Picture this: sunny mornings, relaxed walks, and coffee on your own terms. No alarms, no deadlines, just sweet liberation that comes only with a well-deserved retirement. Sounds like a dream, right? Well, it's not. This dream can be your own, and it does not lie in buried treasure or lottery tickets, but a purposeful financial tool called index funds. This video is your guide into the world of Fidelity's best funds, so let's dive in. Let us demystify the index fund. Suppose that there is a basket with all of the apples, oranges, and bananas in the grocery store. This represents an index fund. However, instead of fruit, it contains stocks that symbolize a particular market segment. For instance, the S&P 500 or the whole stock exchange. In other words, by purchasing one index fund, you own an infinitesimal portion of everything in the basket. And what makes these baskets of stocks so ideal for your retirement path? 3 reasons. Low cost. Think of index funds as discount airlines that make it possible for you to reach your investment destination without having to strain financially. They have really low charges compared to actively managed funds, thus most of your money stays invested and continues generating returns for you. Diversification. It is a reminder of an old saying, never put all your eggs in one basket. Index funds are the ultimate basket, or portfolio diversifiers. They diversify your investment among different companies or sectors, reducing risks and ensuring that rainy days on the stock market don't send your retirement dreams into a tailspin. Passive investing. This is the financial autopilot. Index funds follow the market, so you do not have to spend days on researching individual stocks or be worried about fluctuations. Simply invest, sit back, and witness your retirement funds growing steadily. Now let's explore the juiciest apples in Fidelity's orchard. The index funds that'll be your retirement BFFs. Number 1, Fidelity Total Market Index Fund. FSKAX is compatible to a large bowl of mixed salad greens. It provides the widest market exposure to U.S. stock, representing thousands of corporations, both small and big in every sector. At an expense ratio close to 0%, it is like a metaphoric avocado slice, healthy and cheap. This fund is a solid foundation of your portfolio, providing steady and long-term growth. Let's look at the historic performance of this fund. FSKAX has delivered a 10-year annualized return of 9.73%, closely mirroring the market. Number 2, Fidelity 500 Index Fund. Craving a juicy steak? FXAIX is similar to the best grades of U.S. beef, linked with S&P 500. This fund invests in the top 500 U.S. companies that consist of tech giants, household names, and blue-chip corporations. It is a safe bet for those looking to invest in growth that'll give them some taste of American economic hegemony. Let's look at the historic performance of this fund. FXAIX has generated an average annual return of 10.55% over the past 10 years, outperforming the average large-cap fund. Number 3 is Fidelity International Index Fund. Don't consume only local apples. FIIFX widens your palate to an international buffet. This fund provides exposure to developed and emerging markets, allowing you to diversify your portfolio by going beyond the U.S. borders. Think of it as a buffet table filled with exotic fruits, which provide distinctive taste and richness from everywhere. This fund's historic performance indicates it has achieved a 7.84% average annual return in the last 10 years, showcasing global market growth. Number 4, Fidelity Nasdaq Composite Index Fund. Strap in for a ride on the tech wave. The Nasdaq is the place where innovation and disruption take center stage, while FNCMX mirrors this market. Think about electric cars, social media corporations, or advanced biotech businesses. This fund is for the daredevil investor who believes in patience and long-term gains. FNCMX has delivered a staggering 15.42% average annual return over the last 10 years, highlighting the historical strength of the tech sector. Number 5, Fidelity Select Technology Portfolio, FSLPX. If you want to invest heavily in the tech titans, Apple, Amazon, and Microsoft are like a gourmet dessert of tech stocks that include FSLPX. This fund is a high-growth concentrated investment, which also has higher volatility. It is ideal for the modern investor who would like to have a piece of pie action in technology. Concentrated investment in leading tech companies like Apple, Amazon, and Microsoft. Let's look at the historic performance of this fund. FSLPX has produced a 22.11% average annual return in the last 10 years. but with higher volatility compared to broader funds. Number 6. Fidelity Small Cap Value Index Fund. Occasionally, the most valuable treasures reside in unforeseen locations. FCPVX sets foot into the world of small, undervalued firms with high levels of growth. Imagine finding rare treasures in an antique shop, digging buried diamonds. This fund is suitable for a patient investor who trusts that he will spot the next big thing before everyone else jumps in to take it over. Focuses on smaller companies with promising potential for growth and value. This small cap fund has achieved a 11.27% average annual return over the past 10 years, demonstrating the potential of small cap value stocks. It is always a personal choice, really. Also, take into account your risk appetite as well as the purpose and timing of investment. These 6 options are just the beginning, and with Fidelity's comprehensive index funds, you can put together a stable and attractive portfolio. Remember the diversity mantra? Do not put all your apples or stocks in a single basket. You need origins or bonds as well for balance and stability. Asset allocation is the process of deciding which bonds and stocks to invest in based on your age, risk tolerance level, and retirement time frame. As a rule, younger investors may easily accept the higher stock allocation with an eye toward long-term growth, while those nearer to retirement focus on bonds for return and safety. Markets move to the beats of their own drums, and your asset allocation should match. Rebalancing, on the other hand, involves restoring your portfolio to its targeted asset allocation over time. Consider it as trimming the trees to ensure they get optimal sunlight and nutrients. Periodically reassess your portfolio and readjust as required to restore the desired balanced risk-reward equation. The road to retirement is not always straight. Here are some common weeds to avoid. Chasing returns. Never fall prey to the glittering, fast-flying stocks that promise instant wealth. And remember, slow and steady wins the retirement race. Panic selling. Don't get your portfolio into a tizzy when the market goes down. Don't panic. Weather the storm and know that long-term investments usually rebound. Overcomplicating. Don't get entangled in the financial jungle. Make your portfolio clear and reflect retirement goals only. Bonus tip. Fidelity provides a wide range of resources and tools to support your retirement path. Go to their website, watch webinars, and have a consultation with one of the advisors to know more about their offerings. Remember that you are not in this alone. While you journey on this exciting endeavor, it is important to note that the roadway to retirement isn't a sprint, but rather a walk. Be moved by the flow of waves, gain lessons from currents, knowing that with appropriate instruments and unwavering determination, your golden years will be fulfilled in happiness, enjoyment, and boundless options. Therefore, lift up your anchor, fixate on the horizon, and allow a wind of financial freedom to push you towards a retirement that is all possibility. Thank you for watching until the end. If you enjoyed this video, kindly hit the like button and subscribe to this channel to be notified of new videos. Also remember to share this video. See you in our next video. Thanks for watching.